All right, welcome to Major Market Mondays. My name is David Williams. I'm your host. This week we'll be going over a few things. We're going to follow up on what we got done last week in the market with our sleeper pick. We're also going to go over what is a stock, how do you buy a stock, and then also when you want to buy a stock. Right now with the volatility in the market going up and down, it's crazy. We'll follow up on what our sleeper pick was last week, see how it performed, and we'll also talk a little bit about some of the new sleeper picks that we'll have for this week. So what is a stock? Stock, very simple, is going to be ownership in a company when you purchase the shares. You usually purchase the shares through the stock market. You could buy it in multiple different places. Most times people say, well, how do I buy a stock? I got that question a ton last week. So now I want to make sure that you guys are aware of the ways that you can actually purchase a stock. All right, where to buy stocks? Most people nowadays are using applications. Those are probably the easiest ways to open up, an account so that way you can buy and sell. There's a few apps that we do like. We'll go ahead and go over those, give you some of the pros and some of the cons to that, as well as you can always open up a brokerage account either with your bank or you can sit down with a financial advisor, of course, and get an account open with them, and they'll help you through the process of buying and selling stock. Some of the apps that we like, a lot of people have given me some good options. Acorns, I know Acorns is an app that usually costs between $1 and $3 a month. So depending on how much money you put into the account, it can be something that can be expensive or relatively cheap. An advisor usually charges between 1 and 2% of the money that you have in the account. So kind of look at that and compare it to what Acorns would do for you. Acorns is really easy to use. It uses your spare change from your transactions to invest in stock. Now, one of the cons to Acorns is it only lets you do what they call hands-off investing. So they primarily take that money and invest it into something that they feel like is meets your risk tolerance. So that's something that you'll find out when you open up that app. The next app, which is super popular, is called Robinhood. Most times people like Robinhood because they give you free stock, and if you refer somebody, they also give them a free share. So a lot of people have been using that. The nice thing about Robinhood has no commission. So when you make a trade, you don't have to pay anybody to make that trade. There's no fees involved with it, and there's also no minimum balance. So if you're a beginner or really new to investing, then Robinhood probably is a great place to start, just because it doesn't cost you anything to get in the game. Another beginner, I say beginner investor, is going to be a company called Stash. Okay, Stash is very simple, same thing. It shows you how the stock market works. You start investing in that as far as taking some of the money that you have, putting it in. Now, it's limited in its investment options. It's pretty much only stocks. There's not any bond options. So if you're, kind of diverse and you think that you want to get into bonds or other commodities, then you want to definitely get something a little bit heavier. TD Ameritrade is another app that a lot of people do use. Now that's more advanced. It gives you a lot of research. And the key to this game is just knowing when and how to buy the stock, which companies are hot. They're going to give you a lot of research on that. Now with that one, it has no minimum as well. So you don't have to come in with, $10,000, $20,000, $30,000. It's something that you can start off with $0, and then just kind of build it up. The other thing that I like about it is TD Ameritrade being a large broker dealer, their trades are live, so you'll be able to see as the stock market's moving, your trade getting in and being able to acquire that company a little bit faster than maybe what the app would do for you. And then the last one that I always cover is going to be called E-Trade. Now, if you're a day trader or you ever thought about day trading, E-Trade is really good. It's definitely hands-on. It gives you all the options, so you can buy stocks, you can buy bonds, you can buy mutual funds, and you will also invest in what they call options, which that's going to be later on down the line. We'll cover that one day. Nice thing about E-Trade is there's no commission on that. So there's no commission fee and there's no minimum balance. That's why I like these. So if I was first day investor, I would probably, out of all of these, I kind of probably select Robinhood just because it's free. I don't have any fees associated with it. And also it kind of helps me walk me along that process. So it's really easy to get into. So if you guys, still thinking about which app is good for you, try to interact with some people that have the app. I think that's the best way, is kind of look at the reviews, see which one kind of fits how you want to invest. Also, customer service. You can either email them or give them a call, and they'll kind of walk you through some of the features and benefits of their particular app. And like I said, you can always open up a brokerage account through your bank, or you can work with the financial advisor and they'll open up the account for you and assist you with trading if you're, all the way lost and you're like, there's no way I'm gonna be able to kind of do this on my own, you could get somebody to hold your hand. So it brings us to the next question. When do I buy a stock? So a lot of times people are looking at the market and they're like, man, how do I time it? How do I find that company that's just going to explode? How do I make all of this money really, really fast? The truth is, that's not how it works, okay? The goal is to buy low and sell high. And a lot of times what happens is people are emotional, so we do the opposite. We buy high and we sell low. We sell it on the way down when we should sell it when it's on the way up. And we buy it on the way up when we should be buying it when it's on the way down. So that's why this market, being as volatile as it is really good for investors that are new, because you really don't have anything to lose. Like there's like zero to lose because it's probably as low as it's going to get. Now, one of the tools that I like to use is called the 52-week high or the 52-week low. And anytime you Google a stock or you find a stock, it'll show like 52H or 52L. I want to buy the stock as close to the 52-week low as possible. Why? Because that means that all we have is room for growth. Now, if you're buying it really close to the 52-week high, then it's going to be in a place where it's probably as expensive as it's going to get. And from here, it probably will go down. Especially with this market going up and down, I think you can get a really good portfolio without spending a whole lot of money. All right, now let's look at the progress from our sleeper pick last week. Our sleeper pick last week was Gilead Sciences. Gilead Sciences, when we looked at it at the beginning of the week, it was trading around $68 a share. And I want to say it closed on Friday around $74.50. So if you bought it at 68 and it moved to $74.50, then congratulations, you made some money. I'm going to keep an eye on that one down the line. All right, which brings me to my next pick. My sleeper pick. There's a company that I really do like. It's called Barrick Gold, and their stock symbol is GOLD. The reason why I like them right now is because with all the companies that are going down, this is a company that I do see going up, and it's because they're in the gold space. And if we talked about it in our last video, gold works inverse to the market. So as the stock market goes down, the gold goes up. So that's why we're looking at it. I think yesterday gold went up $80 an ounce. So their company is, of course, in the green. There's a few other companies that I like to add to the end of it. Not really a sleeper pick, but really good deals. Boeing is a great pick right now. They're trading at their 52-week low, primarily around like $98 a share. This company was up at like $400 a share, maybe 5-6 months ago. So I think that they'll get back to that in some way, shape, or form. They have government contracts, and it's really hard to buy planes from anywhere else. Boeing is the primary manufacturer of planes. So I think they're a good pick. Another pick I think down the line is going to be good long term. Probably not immediately. You'll probably lose some money now, but you'll make money in the long run. It's Carnival Cruise Lines. They're going to get a bailout from the government in some way, shape, or form. And by getting that bailout, they'll probably go up from where they are back to where they were. They were trading around $111 a share. They've gotten all the way down to about $40 a share. So it gives you a lot of room to grow in that space. I'm not guaranteeing they're going to make any money today, but I think if you hold them in your portfolio, they'll be a good one for a long-term play. All right. Hey, thank you so much for being here with me. This is another Major Market Mondays. Let's keep it going. We're going to follow up on our sleeper pick, of course, next week. And then we'll also have some new topics up. Please like, comment, and subscribe. We're looking for feedback. I want to put out great content. I need you guys to be here with me. So go ahead, like, comment, and subscribe. And once again, this is David Williams, and we signing out. All right, y'all. Be blessed.